So, what is that one single secret that have kept me in the Nigerian stock market for a long time? That when others seems to have sold their portfolio and then moved to the US market, why do you still trade like local stocks? This is one question that someone asked me though a few years back, and I think it's time for me to share why I'm still in this market. So even though I trade US stock, I'm still not going to dump Nigerian stock anytime soon because I feel there are still opportunities you can take advantage of. Number one is no local knowledge. For the fact that we are in Nigeria, I'm sure it will be easier for you to understand the economy and compared to someone that is trading from the US. So local advantage is very important. And number two, it's this single skill that I'm going to talk about right now. One technical skill to make it big trading local stocks. Hi, you're welcome to Good Folio. This is my channel where I share everything stocks and cryptocurrencies. So today I will be teaching you one technical skill you need, not two, not three, just one. If you master this skill, it will make a lot of difference in your trading journey. And that's exactly what I want to share with you right now. And it's not complex, it's something you just need to practice. It's something that after this video, you could probably find other YouTube videos around it and then watch and watch and watch. And when you finish watching, practice, practice, practice. If you master this skill to a very large extent, it's going to make a lot of difference. And one thing about this skill is that it's also connected to demand and supply skill. So if you learn this skill, you would most likely be able to know when demand is drying up in the market and when supply is about to take over, and the other way around, when supply is about to dry up and then when demand is about to take over. And you know the power of demand and supply in the market because this is the ultimate factor that actually determines price. No matter how good a stock is, no matter how bad a stock is, if the demand for that stock is higher than supply, what happens? Prices go up. The other way around, so you need to know when the demand for a stock is drying up and when the supply of the stock. That's why a lot of people jump on the stock at the top of the market. Today, people keep telling me, oh, I bought Owando at 95 naira. I bought this bank at 100 naira. Nigerian stock is bad. I'm not trading again. I lost my money, whatever, and all that. And they fail to understand that there is a lesson to always learn from every loss. They fail to understand that they need to sit down to look at what they did wrong then and then find a way to correct it and move on. People are still living in 2008 crash. I can tell you categorically that people are still living in 2008 crash. So, but here I'm going to teach you what is that single skill you need. This skill is universal, but I'm trying to drill down to the Nigerian market because I think it will be easier for you to relate with, and I think it will be also easier for you to be able to take advantage of the opportunities that this skill is going to present in Nigerian market. It's a lifetime skill you need to learn. And what is that single skill? That single skill, it's not fundamental analysis, it's not the whole jargon. It's just summarized in one single sentence. Your ability or ability to draw key levels. Learn how to draw key levels. This is the first single skill you need to master the stock market. Key levels. What is key level? Key level is that region where there is repeated rejections. Key level is that region where buyers and sellers are going to fight. Key level is that region where buyers and sellers are going to engage in serious fights. And you know what I mean by serious fight? You are looking for who is going to take over the market at that point. If the buyers take over the market, what happens? The price goes up. If the sellers take over the market, the price will go down. So your own focus as a trader. Remember, I am not saying investor. Let's go back to the title. It's one technical skill to make it big trading. I did not say one technical skill to make it big investing. I've always shared the difference between trading and investing. So I'm not going to repeat that here again. So this is for trader. So you need to learn how to draw key levels. Key levels is that region where you know that buyers will most likely take over the market from here, or region you know that sellers will most likely take over. When you know that buyers are likely going to take over from a particular level, what do? You position yourself ahead of that level. So the moment price gets to that level, what do you need to do? Wait for signal, wait for confirmation, and then you quickly buy. Why? Because you have seen from the past. That's why I said for you to draw key level, there are three things you need to do for you to be a profitable trader in the market. There are three things you need to do. Find area of support and resistance in the market. What is area of support? Area of support is that floor level where price will dip to. The moment price starts coming down, you need to draw your support level ahead. Look at that level projections. Remember, these levels are not exact prices, they are region. So look at region where you know that the price will likely dip to before it starts resuming its uptrend. Now, you are not going to predict, you are not in this market to predict anything. You are in this market to follow trend. That's why I said when you look for this level, now you need to make sure that that level has been repeated. That's why I say you need to look for repeated rejections. So you must go back to the past. You must go back to years. Sometimes when I spot key level, I like to go back to years. It might be that the price has been rejecting that level for over 5 years. The stronger, the longer the years is, the more confirmed that price will likely reject from that area, or the more relevant that area is. And if price fails to come back from that region, then just forget about that stock. So key levels are very important. So number two, I say look for repeated rejection. And number three, wait for buy or sell signal. When you spot key level, I'm going to share few stocks to demonstrate this part, this area that I'm talking about. So when you look for key levels and then you've been able to spot repeated rejections, don't also be so sure of yourself and say, oh, price is going to reverse from this area. Let me quickly jump in ahead of the market. That's a risk. What if price fails to drop? What if price continues to dip? So it's good you wait for signals. And how do you wait for signals? Wait for price to show a bullish reversal. Wait for buyers to take over. Wait for buyers to show that yes, we are now in charge of the market before you move in. So this is one simple skill you need to learn. What does this key level does for you? It helps you to gauge demand and supply in the market. And when you now mix key level with volume, so this is a skill you need to learn if you want to master stock trading in the Nigerian market. No matter the stock you trade, there will always be key levels. So don't just jump into a stock because you like the company, because you feel, oh, the company has just released one impressive result, it will keep going up. Be very careful. What if you're buying that stock at the support region? What if you're buying that stock at the resistance region? I mean, so resistance region is like the ceiling, that level where a stock will get to, then sellers will set in. That level where buyers are most likely going to give up to sellers. And when sellers take over the market, what happens? Price begins to go down. So key level is an important region you need to master in the stock market. Key level is not an exact price. Don't say, oh, Zenith Bank is dipping, it's going to dip to 25.4. Nobody can nobody can predict the exact price a stock will dip to, but you can actually get the region right. You can say Zenith Bank could dip to a region between 23 and 25, 23 and 24. So you watch price around that region. Now the price could dip to 22.9. It's not far from a lower level. So it's a region. It's not an exact price. So enough of this theory. Let's now go to the charts and then see how to draw key level. How I've used key level several times to predict stock. How I've used key level several times to know when to buy and when to sell. So we are on our chart right now. So the first stock we'll be talking about is NNFM, Northern Nigerian Flour Mill. I've been on this stock since last year. I've averaged down on this stock down to almost 5.8, 5.9, or 6 or thereabouts. And I'm still holding this stock. This stock is selling for 8.65. So, and this is one of the stock I recommended to members of my private community last year. We've been holding this stock, and I think this stock is one that would actually grow or that will appreciate so fast than we expect, because in its sector, Honeywell and Flour Mill seems to have been the biggest winner, and I feel that the overall sector inflation things and all that will likely support this company's top line. So, but here's where we're going to key level. This is NFM. You can see that I've already marked my key level right here. This is my key level. So these are the support region. You can see from 2016 to 2017 to this region. You can see here. And then I already marked my key level at the top, which is resistance. So on your key level, you have your resistance and then you have your support level. So your ability to mark key levels like this would help you know whether you should still buy into this stock or not. So it's best to buy a stock that is emerging from the support level. Support is the floor, the resistance is the ceiling. So when you want to buy a stock, always look at the key levels. So it's good to buy a stock that is emerging from support. Now imagine holding this stock from 6 naira up to where it is right now, which is 8.65. So between this point to this point, so we can do 8.65 minus 6, that's like 2.65. 2.65 divided by 6, that gives you 44%. You can see here between June last year up to now. So that's the importance of buying at support level. So you can say, let me buy a stock that is emerging from support and then target the next resistance. Some other people might say, oh, I'm not going to sell at resistance, especially when the company's fundamentals, when the trend, when the factors that are driving the stock are so strong that it's possible that this stock could break out from this level. So there are 2 points. There are two things these support levels or these key levels will help you to do when you want to buy a stock. One, if you missed out on this region, you can actually watch out for this resistance too. So the moment price breaks through this resistance, you might look at what? Buying. Because when a price clears this resistance, it shows the entrance of new buyers. Remember what I said? Buyers were supposed to take over from here, which they did. Sellers were supposed to take over from here, so which means price was supposed to dip. But what if the price eventually clears this? It means the buyers had actually taken over again. Now, it's not the same buyer that moved the price from here to this point actually clear this region. We had new set of buyers. That was why price was able to clear this region. So, and the entrance of new buyers in the market can signal more upside potential. So, if this stock eventually moves past 9.65, then my next important key level right here is this, which is 17. Now, how do you draw key level? Now, look at the previous high that a stock has attained. Look at the previous high a stock has attained. It's important. When you look at the previous high that a stock has attained, you will most likely find key level at that region. Now, when you look at that, remember what I said? It has to be a repeated region. It has to be a repeated region, but not all the time, because sometimes you may not have enough data. You can see here to go back to the past. So if you find previous high, it makes a lot of sense. So and when you want to find previous high like this, always look at the monthly charts. Forget daily. The daily is noisy. Look at the monthly chart. You can see how we're able to date back to 2013. So looking at the performance of a stock from 2013 up to date, it tells you, even when looking at the chart, you can easily spot the area of support and resistance. And when price clears a resistance, it's most likely going to become support. Let me explain that. Now, assuming the same buyers that move the price from 5 or 6 to 9 still held on to this stock, and we had a new set of buyers that were able to clear this stock from here probably up to this point before pullback. Now, if those new set of buyers sell off to take stock, but the previous buyers are still in the market, it's most likely that this resistance will become support. That's why you will always find support become resistance or resistance become support. How does support become resistance? When price moves below this support, and then on a rally back to the top, it found ceiling at this section. That support becoming resistance. But when price clears the support, the resistance region, and then pulls back to the resistance, and then before continuing its uptrend, the resistance has now turned to support. So always draw your key level. Now, why did I pick this key level? I found previous support. Can you see here? So in 2012, how price dipped to this region, appreciated again, went down again to this same region before it eventually clears through. So this is going to be an important resistance region, which was previous support. Now it's not going to turn to my next key level. So if NFM clears 9.5, 10 naira, we are seeing a massive dip to 17 naira. But it doesn't mean the stock is going to 17 naira. We are only looking at key level. We are only following the stock to know what is going to happen. So we are not confused when you hold the stock. So it's always funny when people ask me, should I sell? Should I buy? Should I sell? Should I buy? Why? Number one, they lack patience. Number one. Number two, they don't have exit target, exit strategy. You can either sell when your stock is up by 15, 20%. I've mentioned this several times. It's a no-brainer. When you hold a stock that gives you 15%, and you invest in another company for another 15%, and you invest in another company that gives you 15% three times is already 52%. Sometimes I wonder how people trade stock that they always wait for 100% overnight return, whatever, or 100% return in a month. 15% compounded three times is 52%. So if you're able to trade stocks three times in 6 months or three times in a year, and you make 15% return compounded, you have made 52%. Where are you going to get such return? Well, you didn't make that return from a single stock. You generated that return from just, that's why they said little drop of water makes an ocean. From just a little drop of return, which is 15%, you're able to multiply. That's the power of compound interest or compound return. So back to key levels. So if the stock eventually clears here, we're looking at a move to this region. So let's also look at another stock and the importance of key level. Look at a stock like Guinness right now. Remember again, I had talked about Guinness sometimes, and I have my key levels marked here. So see key levels. Notice how Guinness dipped to this region before it comes. So this is a very important support. Now look at the previous support turn resistance, which is this. That's why in my previous video on why Guinness could top 58 naira, I picked this as a very key level, important key level, which is resistance because it was previous support. So as Guinness continues to rally, what are we looking at? We're looking at an important resistance waiting for Guinness at 58 naira region. 58 naira. That was why I said Guinness may hit 50 to 58 naira because I have already marked my key level. Now the question is, what if Guinness pulls back? What happened? I already mentioned that before. Guinness might pull back to these 20 days. So sometimes key level can also be the moving average of a stock. So, but if Guinness eventually breaks through 58, this is it, breaks through 58, then at least be watching out for 90 to 100 naira region. Now, if I have to go with the key level, we're looking at between 100 to 118 naira. 100 to 118 naira, then Guinness should be able to deliver close to 100% return this year. If it breaks through 58 naira, then 100% return is a sure return. So it's a sure target this year if Guinness eventually clears that. So you can see how I have marked my key level going back to 2015. You can see how it found support 2017. So when you look at key levels based on multi-month trends in the last 10, 15 years, you can mark certain areas that buyers are likely going to take over the market from the seller and where sellers might also take over the market from the buyers. There is no stock that will go up, no matter how powerful, no matter how sweet the return of a company is. It can't go on a straight line. Do you know why? Activities of profit takers. People will always take profits. People will always book profit in the market. So profit taking for me might come in at 58. So that's where we might see brief pullback. So to some that miss this stock, they might just need to exercise patience in the market. This may not come next to this month or next month, but you just have to exercise patience in the market. Watch this stock at 58 naira. If this stock pulls back at 58 naira, then you might begin to load more as long as the fundamentals are still very good. But if this stock breaks above 58 naira, then we might look at entering, because you know that we have another key level that portends of a huge upside um, potential in the stock. So that is key level. Know how to draw key level. It's important. Then the next stocks, let me show you the list of stocks that I'll be looking at. The next stock is NPF. I've watched this stock move from 90 kobo to 1 naira, now 2 naira. Now, notice important key level. Like I told you, when you look at a stock, you can easily tell what the key level is. Look at this stock here. You can see here. Remember, key level is not an exact price, it's a region. So I have my key level right here. You start from the recent support. You can see here how the stock always bounced back from this region, which is 1.56. And before this section, it was previous resistance. You can see how it was rejected from this point down, rejected here, down, went down again, massive back to this area. You can see the rejection, this it dipped again, and then you can see here rejection before it eventually clears that. Now, on a break above this, we have another resistance at this point. You can see resistance here. So now the stock is about to break above this resistance. You can see here. So if we have a confirmed breakout a confirmed breakout above 2 naira. So if this stock comfortably close above 2 naira and start a new month, maybe February above 2 naira, then we can look at a bigger rally. So if I drill down to my weekly charts to make this clearer to you, you can see it's a bit clearer here. You can see how the stock keep rejecting this region before it eventually break out with this 5.67% growth. And then you can see the support level at this point. So this stock has been trading um, in ranges. It has been consolidating between January 2021. So you can see that throughout January, from 25th of January through till December, it's been trading within ranges. You can see here, and eventually breaks out. So we want to be sure that the breakout is confirmed. So I'm watching this stock closely. You can see the importance of drawing key level. The sellers were in charge of the market at this point. Whenever the stock gets to this point, sellers set in. They take profit. When it gets to this point, sellers take profit. Gets to the point, take profit. Get to the point, take profit. Gets to the point. What happened? You're supposed to take profit, but the price went up, meaning that there might be entrance of new buyers in the market. Remember, I talked about repetition. You can see the repeated rejections. And now we're waiting for buy signal. You can see the buy signal coming up here. So this is a huge buy signal, because throughout let me go back to my monthly charts. You can see throughout 2021, the last time the stock, the first time the stock appreciated to that region was in 2018, which was 1.96. And since then, you can see the dip. So right now, the stock has tested it and is about to break out from that level. So this stock is already at all-time high right now. You can see the importance of drawing key levels. Key levels will help you mark regions where buyers are likely going to take over the market, or sellers. Now, when you buy a stock when buyers are about to take over the market, you increase your upside potential. Note, all these stocks must have good fundamentals. I'm not leaving out fundamentals. So before you decide to jump into the stock, fundamentals has to be sound. It's important, because at the end of the day, that's what will drive sentiment eventually. So the next one is academic press. I think this is one of the stock I recommended as one of my 2021 picks. You can see here how academic press has blasted higher. Last month, 38%. This month, 72%. This stock is already up by more than 100%. Now, look at the important key level that I've marked here, which was previous support. So, previous support around 0.86. Now, it doesn't mean that this is the exact resistance. It was previous support. Now will likely turn resistance. So I advise anybody or anyone that holds this stock, if you decide to hold this stock maybe for short term, you can probably take profit a little bit and watch out for events that will play out at this level. Watch out. If this stock, like I always say it, no stock can go up forever. There will always be pullback. So you might need to take profit a little bit, wait if there will be pullback at 86, because this was previous support. So there's going to be a fight at this point. So if sellers eventually wins, we might see profit takers coming before the price would break out. But I am anticipating a clear breakout very soon. So if you hold this stock as a 2022 peak, you might decide to hold it, no sell. Just like me, I have a special 2022 portfolio that I don't even touch. Once I have my stock picked there, I'll keep it and then I'll leave it for the year. Then I could buy the same stock in my trading account. Then that one I could say, okay, let me even sell parts and take profit and wait. So I watch out for these key levels to, to see whether it's time to book profits or not. So academic press right now is getting close to the previous support, which might likely be resistant. So watch out for pullback very soon. So this is very important. Then I have Transcorp. I don't have the time to analyze all the stocks in the Nigerian market, but the idea is to show you how key level works and why you should pay attention to key level before you buy any stock. Make sure you mark your key level. It's important. Now you can see Transcorp key level at this point here. You can see in 2017, you can see the support. You can see in 2020, 3 years after, the same region you can see here. And then at the top, we have our key level at the top, which is 2.36. So you can see how I'm expecting Transcorp to move to 1.7 before 2.3, and I'm holding them gradually because the last time Transcorp touched this region, you can see how it moved gradually back to this point before dip to this region. So as it continues to appreciate on improving fundamentals, I'm looking at 1.72 or 2.42. So these are important key levels to watch out for. Now, what key level does for you is that it helps you exercise patience. No matter what happened in the stock, you've already made up your mind that you are going to hold this stock until now. It doesn't mean that every time you buy a stock, it must get to the upper section before you sell. Sometimes, if your profit is sizable enough for you to take, please take profits. It's important. But what key level does for you is that you're able to see from the standpoint of a professional trader. This is how banks trade stock. They don't jump in because the price is up today. They don't gamble. You look for key levels. Buy stocks that are emerging from key levels. Look at the perfect example. This stock is emerging from this key level. If you buy into this stock at 85 kobo and you ride this stock up to this point, now, notice this point. This was previous support, now turn resistance. That's why I think this level is very important. This level is very key right now. So as the stock emerge from support, so if it continues to rally, then I have my rejection waiting at 2.4. So within that region, between 2 naira to 2 naira 40 kobo. So this is how to draw key levels. Always watch out for key levels in the stock market. That's one single skill you need. When you draw key levels in the market and you're able to buy a stock that is emerging from key level, I bet you will increase your chance of becoming a profitable trader. You improve your chance of hitting the profit targets every time you buy. You increase your chance of becoming a winning trader in the market. Why? Because you buy at the support level, not buying at the middle, not buying because the stock just went up by 10%. So support and resistance are important key level you need to watch out for. And like I told you before, when you find support and resistance, look for repeated rejections. Repeated rejection could be that it was previous support, now turn resistance, or previous resistance, now turn support. And then always wait for buy signal. What do I mean by always wait for buy signal? When price eventually touches this support, always watch out for rally. I always watch out for rally. When I see rally like this, it's a confirmation. But when price is about to touch the support and you quickly jump in, what if it continues to dip. So like here now, you can see always wait for rally, always wait for buy signal when the price has just touched the support region. So this is just my brief analysis of how you should be approaching the market going forward. So thank you. So feel free to subscribe to my channel, hit the subscribe button, and then the alert so that whenever I post a new content, you would be notified. And if you have a comment, if you feel there are things you want me to talk about, or you have some topic suggestions or some stock suggestions, feel free to drop in the comment section. I will also look at it and give you feedback. Thank you.